You're wrecking your credit, and it's your own fault. Why? Because you're following bad advice that sounds smart, but is actually hurting you. And here's the kicker. Number 3 on this list is something almost everyone does, thinking it's helping, but it's actually one of the worst things you could do to your credit. By the end of this video, you'll know exactly what you're doing wrong, why it's killing your score, and how to turn it all around. Let's start with number 10. Number 10, closing old credit cards. A lot of people think closing old credit cards is a smart way to declutter their credit profile or avoid temptation. Sounds harmless, right? Well, here's the problem. Closing a credit card, especially one you've had for a long time, actually shortens the average length of your credit history. And that's a big deal because the length of your credit history makes up 15% of your credit score. On top of that, closing an account reduces your total available credit, which increases your credit utilization ratio, another major factor that can drag your score down. The truth: if you want to build credit, keep your old accounts open, especially the ones with no annual fees. Even if you're not using them, their age and available credit help your score stay healthy. Just don't forget to check in on them occasionally to ensure they're not incurring surprise fees or fraud. Number 9, maxing out your credit cards to build credit. Here's a common mistake. People think that maxing out their credit cards shows they're active with credit and responsible enough to handle it. But let me be clear, this is a fast track to disaster. When you max out your cards, your credit utilization skyrockets and your credit score will drop. Your utilization ratio, the percentage of your total available credit that you're using, is a major factor in your score. And when it's over 30%, your score suffers. The truth: use less than 30% of your available credit, ideally under 10%, to keep your credit utilization low and your score high. If you want to build credit, it's about consistency, not pushing your limits. Keep your balance low and pay it off in full each month to show you're financially responsible without overextending yourself. Number 8, applying for too many credit cards at once. Some people think that applying for multiple credit cards is the fastest way to build credit. More cards, more credit, right? Wrong. Every time you apply for a new credit card, the lender performs a hard inquiry on your credit report, which can temporarily lower your score. If you apply for several cards in a short time, it signals to lenders that you may be desperate for credit or struggling financially, a red flag for risk. The truth: focus on applying for cards strategically. 1 or 2 well-chosen cards with good terms and benefits can help you build credit over time without tanking your score. Patience is key when building credit. You can't rush it without consequences. Number 7, co-signing a loan without a backup plan. Here's where good intentions can backfire. Co-signing for someone else's loan, like a car or a personal loan, might feel like the right thing to do, but it's a big gamble. If the person you're co-signing for misses payments or defaults, it's your credit that takes the hit. Your score will plummet, and you could end up on the hook for payments you didn't plan for. The truth: only co-sign a loan if you're fully prepared to take on the financial responsibility yourself. If you're not 100% sure the person can handle it, or if it will stretch your finances, say no. Protecting your credit is more important than trying to help someone who might not be ready for the responsibility. Number 6, making only minimum payments on credit cards. This one's tricky because technically, making the minimum payment avoids late fees, which sounds like you're in the clear. But here's the catch: paying only the minimum means your balance barely decreases and interest piles up. Over time, this increases your credit utilization and makes it harder to pay off the card entirely. Plus, lenders look favorably on people who pay off their balances in full. It's a sign of strong financial management. The truth: aim to pay your credit card balance in full each month. If that's not possible, try to pay as much as you can above the minimum to chip away at the balance and reduce interest costs. This will lower your credit utilization and boost your score over time. Number 5, relying on a credit repair company. Let's address the elephant in the room: credit repair companies that promise to fix your score for a fee. These companies often charge you for things you can easily do yourself, like disputing errors on your credit report. Worse, some of them use shady tactics that could leave you in more trouble than when you started. The truth: you don't need to pay someone to fix your credit. Start by getting a free copy of your credit report at annualcreditreport.com, reviewing it for errors, and disputing any inaccuracies directly with the credit bureaus. Building credit takes effort, but it's something you can absolutely do on your own with the right knowledge. Number 4. Avoiding credit cards altogether. Some people think that by never using credit cards, they're avoiding the risk of debt and bad credit. While it's true that avoiding debt is smart, avoiding credit cards entirely can actually hurt your ability to build credit. Why? Because without a credit history, lenders have no data to assess your reliability, making it harder to get approved for loans or mortgages in the future. The truth: use credit cards wisely. Start with one card, make small purchases, and pay them off in full every month. This builds a positive credit history without the risk of falling into debt. Remember, it's about responsible use, not avoidance. Number 3. Carrying a balance to build credit. This one is one of the biggest myths out there, and it's hurting so many people. You might have heard that leaving a small balance on your credit card each month will show lenders you're responsible. But here's the reality. Carrying a balance doesn't boost your credit. It just costs you money. Interest accrues on that balance, and over time, you're paying more for no added benefit to your score. Lenders don't reward you for carrying debt. They reward you for using credit wisely and paying it off. The truth: the best way to build credit is to use your card regularly, but pay the balance in full every month. This keeps your credit utilization low and shows lenders that you're in control of your finances. Stop leaving money on the table by carrying balances unnecessarily. It's time to break this damaging habit. Number 2. Paying bills that don't report to credit bureaus. Many people believe that paying all their bills on time automatically helps build credit. While paying on time is essential for financial health, not all payments are reported to the credit bureaus. For example, utilities, rent, and even some subscription services usually won't impact your score unless you miss a payment and it goes to collections. The truth: if you want these payments to count, look for services that report them to the credit bureaus, like Experian Boost, which can add qualifying utility and streaming payments to your credit file. But remember, your credit card and loan payments carry the most weight, so focus on managing those responsibly. And finally, number 1. Opening store credit cards for discounts. Here's a classic trap. You're at the checkout counter, and the cashier offers you a 15% discount for opening a store credit card. It sounds like a great deal until you realize that opening too many store cards can hurt your score. Store credit cards often come with high interest rates, low credit limits, and hard inquiries on your credit report, which can lower your score. On top of that, it's easy to forget about these cards and rack up balances you don't need. The truth: if you want to build credit, stick to a few traditional credit cards with good terms and low interest rates. These will have a bigger positive impact on your score without the pitfalls of store cards. Remember, saving a few bucks at checkout isn't worth the long-term damage to your credit. There you have it. 10 common mistakes that people think will build their credit, but actually do the opposite. Building credit isn't about shortcuts or gimmicks. It's about consistency, responsibility, and making smart financial choices. The good news? It's absolutely possible to improve your credit score, no matter where you're starting from. Avoid these traps, follow the tips we've shared, and take control of your financial future. If you found this helpful, make sure to like, subscribe, and share this video with someone who needs it. Thanks for watching, and I'll see you in the next one.